Hi there folks, welcome to this week's weekly Forex forecast. It's Monday the 30th of August. Okay, so last week was all about the Fed and Jackson Hole. It's basically where Fed Chair Powell was addressing the conference, giving his outlook for the economy going forward. Now the markets were expecting a reasonably hawkish Fed, expecting maybe the talk of tapering, that's basically winding back of asset purchasing, to be forefront and centre. And indeed it was. Powell did mention the need for tapering maybe sooner rather than later, certainly for this year. But I think he was actually quite dovish in his address of that fact. He actually was hawkish, but with a tint of dovish in there as well. He's basically said interest rates are not moving at any time soon, that the tapering, which may happen this year, is not going to lead to an imminent rise in interest rates. So the US dollar has come under increasing pressure. The US dollar was actually quite well bid about 3 weeks ago. Everyone was getting really excited about this taper talk. Now it's had this dampening effect and the US dollar is trading to the downside. So let's have a quick look at indeed what the US dollar is doing. So this is the Momentum Meter. It shows me basically what the currencies are doing relative to each other. Obviously each different line is the different currency. The key there is on the right. You can always download this, of course, from the Forex Signals website if you want to come over there and try it out. Now I put this on the 4-hour chart here at the moment. You see here basically what's been going on over the 4-hour time frame. The green line, I've actually coloured it green because of the greenback. This is the US dollar. So the US dollar was getting quite well bid, quite excited into the Jackson Hole meeting last Friday. But then when Fed Chair Powell started to talk, the US dollar has come under pressure. US dollar, in fact, hit 118 against the euro in the Asian session. So that, as I say, is a reasonably weak dollar against the euro. The euro is still showing some strength. US dollar is putting on a bit of a bid this morning, start the week. But of course, we are going to be all talking about the big event at the end of this week very soon. And that, of course, is non-farm payroll. We'll talk about that more in a moment. So looking at this basket of currencies, I say the euro is one of the strongest currencies out there at the moment. Some reasonably solid data coming out of the Eurozone at the moment. It's really benefiting from a softer US dollar. So the euro is one of the stronger currencies. Also, the markets are in what we call risk on at the moment. Risk on basically means the high risk assets are being bought. So if you look at the S&P 500, the Dow, basically pretty much all the equity markets at the moment, they're all pretty much flirting with these all-time highs. Normally when you see risk on, you normally see the commodity currencies like the Australian dollar, the New Zealand dollar, even the Canadian dollar perform quite well. That's basically what's happening at the moment. Aussie, New Zealand, CAD, all quite strong at the moment. And normally the softer currencies, those are the ones that are used to fund these asset purchases, like the Japanese yen, the Swiss franc, they come under pressure. And again, that does seem to be happening at the moment. So this currency meter, this strength meter, is definitely showing me at the moment that we are in risk on. You've got the Swiss and the yen all below the line, all looking reasonably weak as well. So that's basically the picture at the moment. As trend followers, I'd like to buy the strong currencies and sell the weak currencies. Unfortunately, this doesn't predict the future, but it does tell me where the money is flowing at the moment. All right, let's have a look at what we are looking at this week. So our pairs in the spotlight. Remember, these are not trade signals. You need to do your own analysis. Don't put your real money onto this. Do your own analysis, apply your own strategy. Otherwise, you're gambling. Right, so we're looking at the Dow. The Dow 30, the top 30 companies traded out there in the US at the moment. At the time of me recording this video, the Dow is at all-time highs. I've never seen it higher than this in my 33 years of trading. This is a monumental day. Quite a few monumental days recently, haven't we? The Dow is at all-time highs. This is risk on. We don't see any real reason why this won't continue into this week. Fed, as I mentioned, have highlighted there's no sign of any rate rises in the US anytime soon. I think he only really mentioned tapering because of all the peer pressure he was up against. So all this cheap money is going to aid continued flows into the stock market. So I think the US stock market is poised for a continuation. You may see a pullback along the way, but in terms of the longer term views over the next few weeks or so, I still think the stocks are looking for a reasonably solid move higher. So we're eyeing 36,200 as our next level of resistance in the stock market, in the Dow. Also looking at the pound against the New Zealand dollar, looking for that. Got it as a neutral position, neutral to a negative bias, I actually think. We've been in quite a tight range, as you can see here, down here at the moment. We've got some big support zones coming in, but equally we've got some really high resistance as well. If you look at the daily chart, and in fact we will do that in a moment when I jump onto the price charts, you'll see some big daily resistance in this currency pair. Now the New Zealand dollar has been under pressure since Auckland announced a few cases of COVID and they went into lockdown and so forth. That was basically following on from what was expected to be a rate hike in New Zealand. We believe that the rate hike chitter chatter will basically re-emerge at some point, and the New Zealand dollar is going to start pushing higher and gaining some strength. It's in line with the risk on theory as well. So New Zealand dollar going stronger, pound is pretty weak across the basket as well. So maybe pound against New Zealand dollar is going to test those lows. We'll look at the charts in a moment. Okay, my analysis, again, this is the total risk on play as well. It's buying the Australian dollar, selling the Japanese yen. Australian dollar, commodity currency, tends to do well when stock markets do well. That's looking like it's going to push higher. Indeed, we've had some reasonably good job numbers out of Australia recently. Technically speaking, it's also looking like a play to the upside. We had a bullish engulfing pattern on the daily. So we had a bit of a pullback on Thursday, put in a very strong bullish candle on the Friday. That gives us an indication that this trend now wants to continue to the upside. So buying Australian dollar, selling the Japanese yen is a bias. Again, don't trade that just on the back of that. Make sure you apply your own analysis, apply it to strategy. Trading is all about strategy, not about flicking a coin, hoping it's going up or hoping it's going down. Remember that. These are just biases. Our next level, 81.50, is a key level that I'm looking at to the upside, should indeed that trend want to continue to the upside. Max is looking at a short trade in XPT, that's platinum, traded against the US dollar. He's eyeing 980 as his next level of support and keeping an eye on the dollar with that trade in mind, running into non-farm payroll. Right, now let's jump onto the screens, look at the economic calendar for the week ahead and look at maybe a couple of charts to show you exactly what we are looking at. Come on. Okay, so let's start off by having a quick look at the euro against the US dollar. Now, this is the most actively traded currency pair on the planet. Usually when the dollar goes one way, you're going to see the euro go the other way in terms of strength and weakness against the basket of currencies. Now you can see here that basically since the beginning of May, this currency pair has been in decline. That basically means the euro has been declining against the US dollar. Basically means the dollar has been getting stronger. Dollar's been getting stronger. Unemployment's been dropping. The talk of tapering is accelerating. The talk of rate rises is accelerating. So the US dollar has been getting stronger and stronger. But interestingly enough here, we hit this level of support just a few days ago, back down there at around the 116 sort of 75 zone. If you go back to sort of the end of March, early April, we were back down there again at that level. Now we've respected this support zone and price action is now taking us higher. But what I'm looking at here is this level here. I would have expected this level here, which was old support, to act as resistance. In fact, it hasn't acted too strong to that regard. So now we've taken out that potential resistance. I think the path of least resistance for this currency pair is higher. If you remember from last week's trade forecast, we were looking at 118 as a target level for the euro against the US dollar. Well, we touched that in the Asian session just a few hours ago. I now think the markets will be looking at a retest of the 118.50 level, possibly all the way up to that level there at 119. So all eyes will be on that this week as well. And this is the Australian dollar against the Japanese yen. As I say, this is my risk on bias play for this week. Price action has been on an uptrend now for the last week or so. You'll see we had that doji indecision candle back down there on the beginning of last week, followed by these three green candles. That shows you that bullish momentum is winning the day here. But again, this level here, I would expect to have acted as resistance to the upside. Thursday's candle was a bit of a pullback, but Friday's candle completely engulfed Thursday's candle, indicating a potential move to the upside. We love to use these bullish and bearish engulfers to confirm direction of trend. This pullback seems to have been trumped by this Friday candle, now showing momentum to the upside with the next target up there around the 81.50 level. So that's got my bias, it's got my eyes this week. Again, don't trade these blindly. You need to apply it to your own strategy, whatever strategy you are using. All right, let's have a quick look now at the economic calendar for the week ahead. Okay, so if you head over to the forexsignals.com website, scroll down to the bottom and you'll see all our free tools and so forth as well that you can avail. So it's certainly worth popping over here. Lots of profit calculators, lot size calculators and so forth. Now what I'm looking at here is the Forex economic calendar. I think it's really important that you have an economic calendar to hand. A, to make sure you don't get caught out by taking a trade ahead of a big announcement, a big data release, but also there are sometimes some money-making opportunities in there as well if you know how to trade the fundamentals. Now, the correct way to read this is by looking to the right of the screen, looking at the impact dial. Basically, anything that's green is low impact, anything that's yellow is medium impact, anything that's going to be like to have a high impact news is going to be deemed to be red. So I always like to look down. You can send yourself a notification as well to make sure you're not going to get caught out. It's actually quite a quiet week this week in terms of economic releases up until the end of the week. You'll see here we've got on the 30th, we've got some CPI data out of Germany. That's going to be a high impact news release. In fact, I want to scroll out now to the next 7 days and see exactly what's coming out. We've also got some German retail sales out as well. And also on the 1st of September, we've got some US PMI data. Now, the markets love a PMI read. Central banks certainly like to look at them. They're forward-looking indicators. Basically, it's a survey for the business leaders, basically asking, are they confident about the economy going forward? Are they investing in plant, machinery and so forth? Are they investing in staff and so forth? So it's like a forward-looking indicator. Anything above 50 is deemed to be expansionary. Anything below 50 is deemed to be economy that's contracting. So the correct way to read these is look at what the markets are expecting, then see the release. If it's stronger than the markets are expecting, that's likely to have a positive impact on the particular currency, in this case the dollar. So we'll be keeping an eye on that as well. As I say, not a great deal out for the rest of the week. We've got some GDPs there out of Swiss, and later on in the week it's pretty quiet until we've got European retail sales out on the 3rd. That's going to be high impact news, so keep an eye on the retail sales there. Obviously, higher retail sales, it's good for the Eurozone economy. Basically means people are out there spending money, which is inflationary, which means interest rates may have to move. So we'll always be keeping an eye on retail sales. Quite a strong market month on month. Expected 5.2% year on year, 1.2% month on month. So basically the big event this week, as I say, is the non-farm payroll event. They're going for 665,000 with the unemployment rate showing a healthy 5.2%. Also at this later on in the afternoon on Friday, we've got some ISM surveys. That's certainly worth paying attention to as well. ISM surveys, PMI. So make sure you don't get caught out by that just into the weekend. So it's well worth looking at one of these economic calendars to make sure, as I say, that you're well aware of what's going on the week ahead. And this is a great one that you can use. Okay, so I hope you found that useful. Hopefully you find these Forex forecasts useful. Maybe you can learn a bit from them as well. A bit of an insight to what's going on for the week ahead. Now, as you know, we are streaming live inside our trading room up to 6 times a day now, 5 days a week. If you want to take part in that, interact with us on a one-on-one basis, you can do so. Just come over to forexsignals.com, take out the 7-day free trial. Let me know if you do, and I'll roll out the red carpet, say hi to you personally as well. Don't forget to subscribe to the channel if you don't already do so, and of course that bell notification will alert you the moment the next video has been released, which, as you know now, is a couple of times a week, dishing out all this content. If that's not your thing, that is not a problem. I'll see you next week. Don't forget, non-farm payroll at the end of the week. Another good reason to come and join us here at forexsignals.com. Have a good week.